Welcome to Markets Now. I'm Michelle Roca Scott Varilek with Kooima Kooima Varilek, and a lot of green on the board, except for feeders are slipping just a little bit. But Scott, let's talk about the cattle market. Seems like we try to bounce on any given day, but the market is seemingly continuing to lack some confidence by the funds, and a lot of that still is, oh, we're talking about bird flu ad nauseum, it seems like.
Yep. Thanks for having me. And it's a lack of confidence by the funds and producers, me as well. I don't know if anybody has confidence in, how this cattle market's trading and in the jockeying back and forth that we've seen. You see it in the open interest number just being small and just still bleeds down every day, getting well below that 300,000 comfort level that I always kind of like to see, that we have a truer market when we have that many contracts traded, and we're well below that. And just feels like, nobody has the confidence, the guts to say they want to stick their neck out on this kind of cattle market. We open $1 higher, feels good, and then you swoosh it down quickly to $1 lower, and you're wondering what the story is. The phone starts ringing. What's the story? Why did we break all of a sudden? Well, there really isn't even a reason. It's easy to move this market around as thin as it is, and then it comes back to steady. So we're forming into a little bit of a wedge here. We're well off of our highs, we're well off of our lows, and we're sitting in this middle ground, just kind of waiting for what direction we're going to break out. The time of year spooks me a little bit. We're sitting here in the middle of May. It's usually after your spring rally, spring highs. So you get a little spooked by that. That kind of holds you back from wanting to buy real hard as we, head into a summer time frame where maybe some more numbers are available.
Yeah. At the same time, cash news this week, we haven't had a lot of it, but it sounds like it's better. And, where do you think we're going to fall out here when it all comes to play?
Yeah, I really like the feel of the cash market. That's certainly not the problem here. I think we've got some leverage over the packer. We have tight numbers. That's where our fundamental brains have landed us for the last several years, looking at the cow herd size, looking how tight numbers we are. And I think that we're there. These show lists are small. They're very manageable. I think that's why the packer has pushed us back and why we have so much weight on these carcasses. Yes, there's some cheaper corn and probably some producers fighting the market, but you can put it on a lot cheaper, than you could. So that's also aiding in the gain there too. But we're still not backed up, even with those higher carcass weights. If you wanted to sell your cattle, you can get it done. Usually when we have too much weight, there's it's the producer's fault, and they really get held to the fire because of that. We really don't have that. You can find a home for your cattle. We've been steady in the north at 187 for the last 3 weeks, and I think there's a lot of optimism that we can get higher than that this week. There's interest. These packers are driving around. They're looking at cattle, but they're making sure to tell you on the other side that, we're going to start cutting down to 32-hour weeks. And they're doing the best that they can to try to spook us a little bit. But with our peak grilling season, peak demand season, like I kind of alluded to, this middle of May timeframe, there usually is one last good jolt in the cash, second or third week of May. And I know this year is nothing usual, but usually the packer makes a little run here to try to get some cattle around them, because I don't think they've been out front near as much as years past. So I feel really good about that cash. It's just, can we keep any new bird flu news at bay would be what we're worried about.
Yeah, and of course the packers are also trying to prop up their margins, I guess, on the box beef side. We've kind of slipped here a little bit, $295 on the choice, and we'd like to see that a little better, wouldn't we?
Would like to definitely see that a little bit better. And I hear about the Packers red ink, and it just kind of raises the hair up on producers, because it was just 4 years ago when we were at 95 cents and boxes were over 400. So that we're hearing a lot about that this week as we're celebrating an anniversary of that again. So I think that the Packer made their own bet here with you see a decreasing cow herd. Just shrinking. You're not seeing a producer that says, wow, interest is at 8.5%, 9%. Labor is hard to find, but I really want to grow this cow herd, and I'd like to really stick my neck out there because I think that this market's going to stay high. We're not of the attitude that this market's just going to stay high and this is the new norm. I mean, we're all waiting for the rug to be jerked, kind of like we've seen with some of these black swan events. We're getting so used to it. So I don't see that big rebuild of the cow herd happening. We're getting some moisture. That's going to help some grass. Maybe there'll be some heifer retention that could happen with that. But my long term says, hey, we're going to need some more stable prices. We're going to need to continue these profits for a while if we're going to create that incentive to really grow the cow herd to what we need it to be.
Yeah. Hog market trying to stabilize this morning, but we got below some key moving averages once again here and took out some key support. Initially, we thought, the futures premium to the index, is that made the main problem with that market right now, and that we just can't get cash to get up and out of here?
I think that's what I'm looking at. The time of year cash can rally a little bit, and it's lackluster riding sideways for a month. It had a nice steady uptrend, and the futures were enjoying it. And what you were hearing in the country was good. Packers needed hogs, and we're actually out looking for them. And normally you're having a hard time trying to get on the schedule to get your hogs in. So it was a different feel to it, created a lot of optimism, and that's why we had gotten up to 110. And now we're just kind of on this bleed lower. We're finding ourselves oversold and really, broke out of the bottom side of the range. A lot of negative kind of flips on the chart, but with that index laying there at 91, it's just staying ever so flat. We had quite a premium on them, and the May contract is very thinly traded, but usually May and June kind of narrow up this time of year. Well, they are narrowing up. May's down here near the index. June's just starting to magnet and suck down to it as well. It's going to need some life out of the cash, going to need some life out of the cutout to even maintain the premium it's at right now of $7. So it's getting a little boost here today. I'm not really trusting it. Just could be oversold enough that we're getting a little bounce here.
Gotcha. Grains back to the plus side here after kind of a correction, but the wheat market is leading once again. It looks like on maybe some Russian weather concerns, but do you think that, I guess, this market right now, as far as corn and soybeans, can it move much farther in the face of what could be a pretty bearish report here today?
I think that's exactly what we're looking at. It's just the uphill battle that we have for the grains. I mean, I think it needs something like the wheat to lead, a world story, because that's the hope we have right now. Because as we approach this USDA report, usually, we're going to see trend line yields. We're going to see, what could happen with the crop, with the acres that the USDA is projecting. And it's going to look like we're going to grow these ending stock numbers. That's what it's going to show. So the good news is that we all are talking about this. We all know that's probably going to be the case. So we'll keep an eye on world numbers. I think that's probably your better hopes on the report, that maybe there's some cuts in Argentina or Brazil. Maybe it's probably not going to happen, but that's kind of your lean. There's nothing on this report that I think is going to help.
USD has been slow stepping those South American numbers, so it'll be a surprise if we get a big cut today, don't you think?
Yeah, and I think some of this last South American news is happening, more recent, so it's not even going to hit this report anyway. So it's maybe more on to the next one if we're going to see some differences there. But I don't see a big range happening regardless. I feel like we're going to look at these numbers and say, okay, don't think the market has to do much either way with it. We don't have the news that says we got to break and head a bunch lower or higher. So probably more sideways trade, which sign me up. I'm fine with that for a little while.
Okay. Yeah, no doubt. Thanks so much for joining us. Scott Varilek with Kooima Kooima Varilek. That is Markets Now.